Listen up, folks. I'm about to give you the cold, hard truth about futures and options. These aren't just fancy words Wall Street throws around. They're financial tools that can make or break your future. I've seen too many good people lose everything because they didn't understand what they were getting into. So pay attention because what I'm about to tell you could save your financial life. All right, let's cut through the jargon. Futures contracts? They're agreements to buy or sell something at a set price on a future date. You're essentially betting on where the price is going to go. Options? They give you the right, but not the obligation, to buy or sell at a certain price. It's like having an insurance policy on your investments, but don't get too comfortable. Now, here's the deal. With futures, you're locked in tighter than a drum. You've got to follow through whether you like it or not. Options give you more wiggle room. You can walk away if things don't go your way. But remember, nothing in life is free. You'll pay for that privilege up front, and it ain't cheap. Listen up, because this is where it gets real. Leverage is like financial dynamite. It can blow your returns sky high, but it can also obliterate your savings if you're not careful. With futures, you're playing with fire, folks. A small move in the wrong direction can wipe you out faster than you can say bankruptcy. Options? They limit your downside, but you can still lose your entire investment if you're not smart about it. You've got to manage your risk like your life depends on it. Because financially, it does. That means knowing your limits and sticking to them like glue. Don't let greed cloud your judgment. If you're dead set on speculating on price movements, futures might be your game. But if you're looking to hedge your bets and limit your risk, options could be the way to go. It all comes down to your strategy and how much risk you can stomach without losing sleep at night. Let me break it down for you with a real-world example. Say you think oil prices are going to skyrocket. With futures, you could lock in a price now and potentially make a killing if prices go up. But if they drop, you're on the hook for more money than you might have in your entire emergency fund. With options, you could buy a call option. If prices go up, great. If not, you're out the premium, but that's it. You're not going to lose your house over it. Now here's what you need to do, and I want you to listen closely. First, educate yourself until your brain hurts. Don't even think about jumping in without knowing exactly what you're doing. Second, if you absolutely must try this, start smaller than small. Don't bet your kid's college fund on your first trade. And finally, have an exit strategy that's set in stone. Know when to take your profits and when to cut your losses, and stick to it no matter what. Folks, I'm going to be straight with you. Futures and options are dangerous tools that most people have no business messing with. They're not evil, but in the wrong hands, they're financial weapons of mass destruction. If you're out of debt, have a full emergency fund, and are investing 15% of your income for retirement, maybe, just maybe, you can consider these. But for most of you, stay away. Stick to tried and true methods of building wealth. Your financial future is too important to gamble with. Now go out there and make smart decisions.